Okay, it is the 2nd of December 2018. I'm re-recording my video for the week starting December the 3rd because I cleverly managed to mute the microphone the first time around. So, US dollar index chart. This is the weekly chart. As you know, we're monitoring this rising wedge situation, which so far is quite negative for the dollar. As we hold the upper trend line, which is placed just below the 61.8% Fibonacci resistance area of 97.87. Trend line comes in at 97.60.65. Last week we topped at 97.53.54. So at the moment the outlook's negative as long as we hold below there, and we should eventually, according to the weekly chart, turn down 100 pips, 200 pips or so to 95, 90, 95, 80. From up around the mid 97.50 area and test the 200-week trend line, 200-week moving average, and the lower trend line in that sort of high 95 area. Obviously, if we break above 98.00, and I'm not sure what reaction we'll get from this G20 announcement, the Trump thing with the China thing, the delays to the increasing tariffs from 10 to 25%. So if that is positive for the dollar and we start moving above 98.00, then we've broken out of all the resistance, and that's going to be a buy signal for the dollar on Sunday night. This is the daily chart. So we've got a little bit of support down here at 96.80. Actually, I'm going to show you that on the 4-hour chart because just a little bit more accurate. So the 4-hour chart gives us the trend line at 96.70. So call it 96.80, 96.70. That's your short-term support. So obviously a break below the 200-period moving average at around 96.60 will confirm that longer-term bearish picture and give us a short-term sell signal, taking us down towards 96.00, 95.80. So yeah, that's my negative suggestion. And that will only change in a break above 98.00 for the US dollar index. Aussie dollar's been pushing higher against the US dollar. We had a decent recovery this week again. So the question is, I don't think this is a particularly strong resistance level, and we do have something of an inverse head and shoulders pattern here. So we can argue that this is the left shoulder. This double bottom here is the head, and we've now formed a right shoulder with a break above the neckline at around 73.50, giving us a buy signal. That could take us 300 pips higher. So the first target will be 74.20, and then we could even push on up through 74.50 to the mid 7500 area. If you are looking for a swing trade, we could reach as far as the 500-day moving average at currently around 75.88, as you can see the green line. So just bear that in mind if you're looking for a swing trade. If you believe that the dollar can head lower, according to what I told you on the dollar index chart, it's about time the dollar moved really. Then this could be something that you could hang on to. So we'll monitor that. Now on the downside, I'm going to actually show you the 4-hour chart. I think that's more important for the short term. Okay, so we've got some support down here from little trend lines and moving averages down around the 72, 60, 50 area. So below there, I'm going to suggest that there's more downside, and we certainly get down to 72.00 in the short term. We've got some support on the daily chart around 71.80, 71.70. So that really has to hold. This could be a buying opportunity down here. That would still keep this inverse head and shoulders pattern intact. Actually, if we held down here at the trend line and the 55-day moving average and the fib support at 71.80, 71.70, we could then turn around and rock it and then maybe break that neckline for our buy signal. So these are the possible situations that could arise, I think, in this pair this week. New Zealand dollar is less clear. We've had a good run against the US dollar. You can see that the 200-day moving average is the thing that's been doing the job in holding us back. We've pulled back, which isn't, normal in a bull trend. So we've had a pullback, a little bull flag there, broken higher. Now we've closed above the 200-day moving average. So as long as that holds on Sunday night, we obviously have further gains possible. We're looking at 7,000 and 7,023. This little resistance area up here is where we could make it. So a decent run if you want to jump into a long if we hold above this 200-day moving average, which is around 68.70, 68.60. So just keep an eye on that level as long as that works. Don't see why we can't keep going. Not overbought on the daily chart, so there's scope certainly in that respect. Not seeing anything particularly strong on the weekly chart, and again resistance up around 69.90, 70.24. So that 770 area is going to certainly cause problems, I would hope, but it will also act as a good target if we break above the 200-day moving average. Dollar's already had a good run against the yen. We're now in some sort of triangle formation, which really is a consolidation pattern rather than a reversal pattern in my view. I've still got it in the back of my head that the dollar could turn around and get weaker, of course. But anyway, if we break above 114.00, there's no reason why we can't test the 114.50, 60 area, which is the high for the year. It's set in October. Just check that is the high for the year. Yes, it is. On the downside, we've got some support down here at 113.10, 113.00. Not strong support, but that would be your first support level for the week. We break below 112.80, which is just a very, very minor trend line. We come down to what is certainly the most important support for the week. We had this on last week's reports. 112.20, 112.10, 120. Well, I'm going to call it 112.25, 112.15. 100-day moving average. Confluence of fibs and a fairly decent trend line stretching back to August, so that looks like somewhere that you want to be trying along if we get down there, and a break below that will obviously break the short-term bull trend, and that would be more negative. I can't see why we wouldn't dip to 111.30, 111.20. So there's some trade opportunities there, sure, where there's potential for 100 pips here and there. Just to show you on the weekly chart that there is resistance. I'm sure you'll remember when we topped up here, if you've been trading the dollar yen, we had some resistance in that mid 114 area. So we'll have that again. You can see I've put these lines, these horizontal lines on here, just to indicate where we've had price resistance previously. We're going to have to get through 115.00 for the bulls to be firmly back in control. This is a relatively minor trend line, but just be aware 115.50, 60. So easy to remember. Mid 114 area, get through up to 115. And then 115.5. Euro yen, as I say every week, the chart's a mess. Not really much to go on, but certainly we had a lot of resistance up here from the moving averages from 129.40 up to 129.50, and we've reversed from there. I did have 129.00 as a trading level, so it slightly blurred that level. It worked so well for so long, didn't it? And then at the end of last week, we tried to break above it, but we couldn't. I think I had stops above 129.30, so maybe if you were short, that did work. Anyway, we reversed on Friday, so looking pretty negative after Friday's movement, below the 500-day moving average. A little bit of a trend line there. This isn't something I would be looking to trade, but if I had to put a trade on, I think I would be selling this right now. Euro US dollar is all about the inverse head and shoulders as well. So we saw that on the Aussie versus the US dollar, and if this ties in with my theory of a weaker dollar, then we've got this is 4-hour chart. Left shoulder, head, potential right shoulder. Sort of failed a bit on Friday. We're going to have to hold at least 112.80 and then break through 113.90, 114.00. The neckline's up here at 114.40. So there's a lot of work to do before this pattern completes. So don't start buying it now in the hopes that it completes, because these things, there's no guarantee. Let's just wait, sit back. Right now, if you're trading it, then you're just trading these levels. 113.90, 114.00. Support down at 112.80-ish, 112.70. A break below the 112.64 low that we had last week. So maybe a stop below 112.60. Could take us down to the previous low at 112.10. Sorry, 112.20, 112.10. And then we have to see if a double bottom forms. And then we get a rally from there. But that's jumping the gun. Let's just deal with that as and when. Gold chart, well, we're in this gently upward sloping channel, but mostly sideways action over the last 2 weeks anyway, so it's not particularly easy to trade or hold on to a trade. For me, the important level down here at 12.10, 12.08 from the 100-day moving average, the short-term trend line. The Fibonacci support, so as long as that holds, we'll stay in this upward channel. Break below, say 12.06 would obviously be negative, and we are in a longer term bear trend. So this could just be a bear flag, meaning that we dip, we get a bear flag, we break lower for the next leg lower. So this really is very important. Worth buying, stop below 12.06, reverse into a short because it's such a critical level. Other than that, we've got this very minor trend line up here at around 12.25. A break above 12.28, 12.29 should be bullish. We run into a little bit of resistance around 12.38, 12.40, and then if we get up through 12.43, that would be bullish. And I don't see why we couldn't get up to sort of 12.55, 12.60, 12.55, even 12.65, which is what's going on up here.